Hey, I hope everyone's having a great Saturday. I just wanted to take some time to go through the watch list from Lotto Friday. Again, you could have taken the next week out, totally fine. I just wanted to go through what I was seeing and how I thought about certain trades. So I'm just going to take it in order from the watch list. Again, the cool thing about these levels is that they're really just pivots. I mean, I call them the call trigger and the put trigger. However, at the end of the day, they're just key levels where price is going to make a big change. So you can honestly play them either way. You can play bounces or you can play breaks. Rejections, same exact thing. So levels are levels, right? Resistance will often become support, and support will often become resistance, and that can be a really great way for you to take trades in your advantage, right? Play some relative strength, play relative weakness. For an example, if you're looking at SPY and SPY's, you know, under a resistance and it's trying to break out, and maybe it does, and it goes green a little bit, but the current stock that you're watching is still struggling to break through its own resistance. That's a quick way that you can identify, okay, this has relative weakness. If it's not running when SPY is, then you can, think to yourself, okay, SPY can run, but Facebook keeps getting stuffed. Then as soon as SPY comes back down, Facebook would theoretically get smoked. So I'm always looking for relative strength, relative weakness plays, and that's why I love to play individual stocks because they all have varying setups that you can, go back and forth with SPY, compare it, contrast it. What is this stock telling me other than what SPY is telling me? And, or any index, you can look at SMH, which is a semiconductor index. You can see what is AMD, NVIDIA, what are they doing relative to the index? And that's a great tool to add to your repertoire. Additionally, VIX is a great thing to look at. VIX and SPY, compare and contrast those. Perfect thing to add to your already daily plan. So first one on the watch list was Facebook. So again, just to repeat this, the blue lines are the triggers that I came into the day with. Triggers, pivots, levels, support, resistance, whatever you want to call them. These are the levels that I came into the day with. And the orange lines are lines that I have either previously had or they're profit targets that I've added throughout the day. So I'm keeping them on the chart because I want everybody to be able to see um, what my thought process was throughout the day. So I'm noticing that right away Facebook gapped up. Okay, I'm keeping it on the 5 minute. I always stay on the 5 minute during the day. Facebook gaps up. Okay, the call trigger being 331.40, and we're above it. Okay, so in my head, I'm thinking I either want to retest down here to this level before I take calls, but at the same time, whenever we're in a gap up, gap down type play, I'm always thinking both ways. And these are in interviews that I've done, these are in my threads. Please go read those if you'd like to hear more about this style. But I'll try to explain it simply and quickly. Basically, as soon as it's outside of these blue lines, I'm fine playing it either way because I know that it's past a key level that almost promises a large move. So, okay, we gap up. Well, what I'm looking for is either a tap of this level and a couple ticks up, and I'll enter calls, or a breakthrough and a confirmed breakdown below this level to take puts, which is honestly, it's tough at first to figure out. Okay, well, what do I want to take? If I'm thinking it can go both ways at any given point, how do I make up my mind? Well, the good thing that you can do is just manage your risk. So if you enter, you want to get as close as possible to this 331.40 because your risk could just be directly below it. If you if you get up, the price comes down here to 331.30, and you took calls, you could have just cut them for very minuscule loss. However, if you took puts, I mean, you could have gotten all the way down to here. right? And on a Friday, I mean, which it was, you should be taking those gains extremely quickly. So you could have easily made gains there. Additionally, you see there were so many scalping opportunities on Facebook. Um, off of this level here, to calls or puts. You could have made money any number of ways here, but I tended to stay away from it until I really saw the real move. And what you could have done here was you see this 5 minute confirm below the call trigger, right? You could just think of it as a pivot. You look at SPY, you see SPY's weak, Facebook can't break out, it's still under VWAP, right? This white line. You say, we just got that 5 minute candle confirmation underneath this. And one of my good friends, Sherry Boat Queen on Twitter, she took a starter right here. She said, okay, this is a little extended past my entry point. Smart to take half size. And then she noticed that it popped back up. She added up to her full size, and then boom, there's the flush. Right? This is just a pivot level that you can play off of. So incredible trade by her. But you notice there's still so many ways to play these levels. So I didn't take that trade, but I took one later this day. So I see, okay, wow, you could have even taken on the confirmation below this, or and gotten this move, or this move here. Um, but additionally, what I'm seeing throughout the day is there's about right here is when I'm looking for an entry. I'm seeing that it's kind of hovering around my put trigger, or my support, which used to be resistance down here. And I right about here, I'm drawing this yellow trend line, and I'm on the 5 minute. I just draw this trend line. So okay, we've touched it several times. Seems like this could be a good place to add calls, and if we broke below it, it'd be a good place to add puts. Well, the awesome part is that it actually correlates perfectly with my put trigger from last night's watch list. So what I'm noticing here is I know I have underlying support here. I know that this is a key level. I also have this short-term trend line that I've just recently drawn. And I say, okay, we go below it puts, we go above it calls. So what I actually did was I had grabbed puts really quick right here, because I had thought maybe, it was under, and I thought, maybe we would be bearish, thinking we might break this trend line, a little bit early, but they went green about 5% here, and so I set my stop loss for break even, and I broke even on them because it shot back above the call trigger, or the put trigger, sorry. So broke even on those, but I'm still evaluating because I know that I can always re-enter. And I knew that this was at a very, very a crucial spot. I knew this trend line was matching up with this key level. And so I said, wow, it's still bouncing. The volume's increasing down here. I know that this thing probably has some gas in the tank. So I see it staying above that call trigger. I say, boom, I'm adding calls. Right here on this candle, I added 330 calls. And this is just me playing the bounce off the support and the trend line support that I knew I had. And boom, we get it. I scale somewhere around here, around this 328.79, 78-ish, knowing that we had previously rejected there a couple times, scaled about half here. I don't know, maybe 50% gains, rode most up here, took the remaining quarter off at about 100, and then up here got to about 140. Took some off up there, and then ended up stopping out of my runners at about here, about 90%. So that was just the the multiple things that were adding up together to show me conviction in a trade, right? Even though this is the put trigger, it still is a key level. It's still a key pivot that you could have played. Now, going forward, I'll go through the rest of the four, and these will be a little bit more brief, just because that was kind of the main thing I wanted to talk about. Play these levels with creativity. So you see a firm here. This chart looks a little bit, gappy, just because of that's how the stock is, and TradingView doesn't really display these quite that well. But you see the initial drop below the put trigger was extremely quick. That would have been a hard one to catch. However, you do get this retest back above, and then you got a 5 minute candle confirmation below. Boom, could have added there. Uh, Taking it down would have been a great move. I think I had the 115 puts, so those would have gone quickly in the money. And at one point, those were about $2.50 in the money. So great play there. Just looking for the retest and then the confirm back below. Additionally, throughout the day, I noticed this trend line, and I actually played a firm. I noticed that it was, staying very strong with this 113 support. I was just playing trend line ads, and so I was buying puts up here on top at about 114, and then initially, it got much tighter because of this 113 support, so that the range was getting restricted. But I was taking some puts up here and then just writing them down and selling, on a Friday that's 20-30% pretty instantly. So if you're seeing a clear trend forming, the very safe way to add would just to be take puts on the trend line test for the move down back to the support, and that's easy money. And if it breaks above, just sell it before, because if it breaks this trend line to the upside, it's gonna rip a little bit. So if you see it trying to do that, you just cut it for minimal loss, because as long as you're really close to the trend line, as long as you're really close to the level, you know your risk is minimal as long as you stick to your risk. Same thing here. You could take calls every single time off of 113, and it would have gone up. Just get it close to the entry. It's all about entry. So here's Twitter. Here was the call trigger. Here was the put trigger. At we open within the range. Okay, cool. Um, what I did on this one was I took puts as soon as we broke this 45.90. I took puts at about the first minute after this candle, because what I was looking for was um, I wanted one candle to drop below the low of that candle, so which was this. So it had bounced up. The 5 minute didn't close below it, but I noticed it was back below VWAP, and I just wanted a 5 minute or a 1 minute candle to go below. Oh wait, I'm looking right here. Wanted a 1 minute candle to go below. So I had added about right here, and took those down to about right here. It was a simple, 4 minute trade, and got out of those because I knew they were $45 puts, which was a little bit of a stretch on a Friday, but they moved from about 14 cents to 17 cents very quickly, just confirming that this was, a good level. We even got a retest up there, boom, and then just a very quick 3 minute drop. Then that paid really well. Next one is probably the best trade of the day. Coin was very very bearish, at least in my head, going into yesterday, and so I had the level 268.30 as a call trigger, and I had 258.75 as a put trigger. Discussed this one on live with D-Book and Mans, and I think we all agreed that this was a great setup going into yesterday. So we actually see, which is funny, we see the rejection of the call trigger. I know a lot of people that play the levels, and they will do just that. They'll take rejection puts on the call trigger, and look at how that would have printed. I mean, it's not even below yet. So there was an opportunity to get faked out here. Sure, absolutely. If you bought on this confirmation right here, you would have got faked out. But here's the thing: what I ask myself is, I say, okay, where I'm entering. So if I'm entering $1.40 below the put trigger, right? If I'm entering puts here, I'm saying, okay, well, that's pretty risky. I always think to myself, I say, if this were to retest, which more often than not it does, if this were to retest, how much would I be down? And if that is too much for my risk appetite, then I don't take the position. If it continues to fall down, I just let it go. And I'm not going to look back at it with any, without being upset. I I want to take plays that are close to my entries. That's why these levels are so important to me, because that is my target for taking any sort of entry, call or put. I don't care. So ideally, we wouldn't have taken it down here, because we knew that on a Friday, going up to this retest, we'd be down about 15-20%. Um, but if we go back up here, we see this retest. We kind of see it just basing around this level a lot, testing VWAP and denying it. Now that's where I'd say, okay, we're looking a lot more bearish here. And then boom, 5 minute, boom, 5 minute. And I see this 5 minute confirm below low of day. That's when I hammer the puts. So I jump in right about here, and then kind of we get this candle that tries to test. I think I jumped in 250s. Yeah. And then 250 puts, and then it tests around this level, kind of a little bit goes up to test the low of day. My risk would have probably been above low of day, probably 257.35. And I was playing with profits at this point, so I'm fine with giving myself a little bit more risk, and it never gets up there to my predefined risk level. It just flushes over the next 20, 30 minutes, and I get out probably about half here, and then probably about half down here on this little bounce. And that was a quick 40% move. And then the last one was AMD, which was a similar story to Twitter. But again, the levels really tell a great story here. So, we see gap up. We could have played this confirmation below the put trigger. So what we see is it never touches the level. So we're not taking calls, and we see that this 5 minute actually closes below. So calls were not really in the picture here. It looked quite bearish after this candle, and so I say, if you took puts here on this confirmation, you might not have been read the entire position. You could have taken puts, boom, right down here, 5 minute trade, instant green. Um, Again, we get a perfect retest of this. Could have taken puts again, assuming that there'd be weakness with VWAP resistance. Boom, right back down. That would have been another great move. You could have also seen that support was building here, um, intraday, and you could have taken calls at this level again. Boom, that would have been a great play. Um, Again, we get another test, and not one candle confirms above this level. It just stays bearish. You could have taken puts again if you wanted to and just rode them down here. I mean, there was many opportunities to play this, and that's all. It's the same story. If you get a gap up, gap down type play, either direction is in play in my books. I get that that's um, a little advanced, but I think that it's very important to note that, because taking these both ways, it can be something that can really make you a very versatile trader and capable of benefiting from any stock any day. So I personally did not play AMD. However, I did play all of the other four, and I described my exact trades. So um, about looking into next week, I'm saying SPY hit all time high, and at least I believe so. And we got that nice little momentum toward the end of the day, which was really good to see. I mean, if we go look at SPY, it was pretty range bound for most of this week. So if you were green, congratulations, right? That This was a weird week to trade. At least I think so. It was a weird week to trade. Um, but this is proof that you should be capable of playing, resistance, or, take puts on resistance and take calls on support. It can be a very useful tool, and I would encourage everybody to, if you're not used to it, at least try to add it to your arsenal, because when the market wants to get all choppy, you can still make plenty of money in large cap options just by playing rejections or bounces. There's a lot of money to be made any day of the week. So whether the breakouts or the follow through are not happening, you can still be benefiting just by playing key levels. So thank you for tuning in, and I hope everybody has a great weekend.